With our setup completed in the last video, we can now move forward and decide which currency pairs we're going to trade with this tree model strategy and why we use these currency pairs, and also, more importantly, how do we actually trade this now. Hi, this is Lode with Black Bear Golf Trading, and welcome to my channel. I appreciate you being here. So, which currency pairs go best with the three model trading method, being dynamic, the numbers and flow combined into one? Well, the three currency pairs that we use strictly for this trading routine are right here. They are the Euro USD, the USD JPY, and the GBP USD or British Pound USD. Those are the only three we rely on. The reason being that these currency pairs have generally the lowest spread, the best movement, the best momentum, the best volatility, the best liquidity. All the other currency pairs are, while they could be traded, either lag tremendously. For example, the USD ZAR or the USD African Rand has long periods of just going flat. While we need patience with this strategy, we don't need over-exaggerated patience now either. So we use currency pairs that show movement and that can make us some money, because after all, let's just be honest, that's the name of the game here. So with that out of the way, how do we trade this? Well, this is being traded contrary to the normal standard, meaning we are not going from left to right, we are going from right to left, and we're going from bottom to top. So that's the way we analyze this. So if I were to draw this, we are going like this, like that, and then from there, here, and that's how we trade this. That's the flow of our logic. So what do we check for first? Well, the first thing we check for is to see where we are with our trend. And remember, we use the ADX set at 18, not with the full 10 or 14. To do that configuration, we added two levels, 25 and 40. And the premise is that as long as the ADX is floating between 25 and 40, we have a good to strong trend. Then we check our next two numbers, the plus DI and the minus DI. If the plus DI is greater than the minus DI, it also means that the trend is slightly moving upwards, which we can see right here. If it were to be the reverse, that the minus DI is greater than the plus DI, it would mean that the trend would be slightly moving downwards. Do not get paranoid or hung up on these numbers here. The main concept of all this is that you pay attention where exactly the ADX is hovering. And if it's hovering between the 25 and the 40 or above 40, then you're definitely very solid. But between the 25 and 40, you got a good trend going. So now, again, this does not do anything else except for giving you the strength of the trend. It doesn't tell you the direction. It doesn't tell you whether you have a trade. It only tells you how strong the trend is. So with that out of the way, let's move up. And when we move up, we can now determine the trend. And on the H4 chart or the 4-hour chart, that's the only purpose for this chart, is to determine the trend. The trend is being determined twofold. One, the fast EMA must be below the slow EMA for a downtrend, or the reverse for an uptrend. And price, if in this case we have a downtrend, price must be below the fast EMA to confirm that. In an uptrend, we would have to have price above the fast EMA to confirm that it's a good uptrend. Once we have determined now what trend we got, we come here and we look for confluence. Confluence means, is this matching so far? And at this point in time, we already can see, no, it's not. If you take a good look right here, the fast EMA is above the slow EMA, and the price is clearly above the fast EMA. So this is not matching this. That's a no-no. So already we don't really have to go any further. At this point in time, we have no trading signal. This run that we have right here has really ran its course. It's ended, and right here. So, and you can see that by what is happening right around here as well. Price has also gone up right here. So we're definitely, this is not to go any further. I don't need to look at this chart here, what is happening. Just we're done looking, or at least we're done analyzing the Euro USD. By the way, the beep that you hear in the background, my apologies, but I'm running a trade on another platform, and that's signals that is telling me what is going on, being sent to my cell phone. So that's the beeps you hear. Sorry for the disruption. Let's continue. So we check another currency pair, and to do that, we use the USD JPY. Oops, let me get out of this. Sorry about that. Here we go. We use the JPY, and we make sure we move that into every chart so that we match up. Now what do we get here? We repeat the process. Well, from first glance already, following the concept that I just told you, bottom right to top right, then to the middle, then to the left. Right here we can see our trend is weak. We are below 25. It's a weak trend. On top of it, even though and on top of it, the minus DI is larger than the plus DI, so we're gradually hanging down on top of it. So that is what we're really kind of seeing right here as well. Even though this shows that we have an uptrend, we're really no longer, that uptrend has either come to exhaustion right here, or we're entering a flat or a consolidated period. So there is really nothing more to do. We don't need to look here or here. And it's the end of that. We're done with that currency pair. Our analysis stops right there. Now we try the British pound. Okay, and I keep forgetting that. Sorry about that, guys. Here we go. So we go British pound, and again we make sure that is on all our charts. There we go, and we do the same thing. Here we are. We had, as you can see right here, a very strong trend at one point. It was well above 40. It since went back in the good zone, as I call it, which is between 25 and 40. That means the trend is still solid, and we can clearly see that the trend is down, and price is also below based on our parameters. Remember, fast EMA must be below slow EMA, and price must be below fast EMA to have a downtrend. Reverse is true for an uptrend. My only issue here is that since the strength of the trend indicated by our ADX is somewhat heading down, and price has kind of retraced right here, at this point in time, I would not consider going any further and taking a trade, for the simple reason that we're sitting here and I want to see, will this continue to go up, or will it actually retrace back down? And if it retraces back down, then I'll move to here and see, is this in alignment with what we're seeing here? And if that is in alignment, then I'll check this chart and see if we have an entry signal at this point in time. So this is the whole concept of the pre-model trading routine. It is very accurate as far as getting signals. The signals have a high probability of success, but they are not that often. As you can tell just by the analysis that we did, for everything to align It doesn't happen constantly. If you are still sitting or set in your mind that you need to trade, be in a trade to feel alive, you can't function during the course of your day without being in a trade. This may not be for you because this setup right here requires patience. Now, as time goes on, we're gradually going to modify this so that it becomes easier to handle and easier to do. And in the next video, I will share with you how we can automate this a little bit with free tools so far that will do part of the analysis for us. The concept again of this trading routine is that we must have a solid trend, which is determined by the chart. Let me write this down here for you. We must have a solid trend. Oops, if I only put that right. There we go. Solid again. Lord. Solid trend determined by the H4 chart. Okay. We must have a matching on H1 to follow that along, and then on the M15 we must have a crossover must exist so that and direction must be the same. My writing isn't the greatest, sorry about that. Anyway, that's how this works. That's the entire premise of this trading routine. Again, I have a short, brief manual explaining all this. Please download it, read it. It'll make all this a lot easier to understand. It really isn't as complicated as it may come across to some of you. Again, more than anything else, you'll find that you're going to need patience with this routine. Again, this is quantity over quality. No, I'm sorry, I said it backwards yet again. It is quality over quantity. I always get this wrong. I mean it right, but it somehow comes out wrong. It is quality over quantity. So it is not how many trades you take, it is how many good trades you take. And again, with this setup, you have far fewer than you would under any normal trading routine. But again, this comprises of multiple factors, and because of that, you have fewer trades but of higher quality. All right, this is it for now. Tomorrow we'll start with automating this a little bit, and I'll give you the tools that you need to do that. So stay tuned for that. Until then, take care. Have a wonderful rest of your day. And as always, God bless.